class 12th. I am Avnash Lambert, your economics guru, and welcome to the online tutorial sessions for economics. Today we are going to continue our third chapter, which is national income of macroeconomics. So today we are going to start the measurement of national income. National income is estimated by Central Statistical Organization. So students, here is your 1 mark question. Which institution calculates or estimates the national income in India? It's the Central Statistical Organization. This organization estimates the national income in India. Now, national income can be calculated by 3 methods. Students, there are 3 methods by which national income can be calculated. Today we are going to start the first method. The first method is value added method, also known as product method, inventory method, net output method, industrial origin method, and commodity service method. In your NCERT, production method or product method is being mentioned. Other methods are also known as value added method. So all these names belong to one name, that is value added method or production method. Now, what do you mean by value added? What is the concept behind the value added? Now, it refers to the addition of value. Addition of value. We add something to something, right? Addition of value to the raw materials. We add some more value to the raw material. It refers to the addition of value to the raw material. That is intermediate goods. You already studied what are intermediate goods. Those are the raw materials by a firm by the virtue of its production activities. It means if someone has bought the raw material and by applying all the production activities, he can convert that intermediate good into something which is a final good, then it is known as value being added. If we add something to the raw material, then that additional value will be the value added. Is that clear? Now, value added, there is a formula. Value added is equal to value of output and intermediate consumption. We will come to these points after a few minutes, but let's understand what are these things. What is value added, what is value of output, and what is intermediate consumption. Let's start with an example. Now students, suppose a baker. You know what is baker? Baker who bakes bread, cakes, like that. Baker needs only flour. He needs flour to produce bread. Everybody knows flour is required for making bread. So a baker needs flour to produce bread. He purchases the flour. Obviously, if he wants to make bread, he needs to purchase the raw material, the flour, as inputs. Inputs means raw material, worth rupees 500. So the baker has purchased flour as raw material, as input for rupees 500 from a miller, from someone who makes the flour. And then by performing production activities, baker converts the flour into bread and sells the bread for rupees 700. After purchasing the flour from the miller at 500 rupees, the baker, by applying all its production activities, by the virtue of its production activities, he converts that flour into bread, and that bread is being sold for rupees 700. Now let's understand things one by one. The flour is a raw material which is an intermediate good, and 500 is the intermediate consumption. The expenditure which is done by a firm on the intermediate goods is known as intermediate consumption, and for purchasing the raw material rupees 500 is being spent, which is known as the intermediate consumption. Now students, bread is the output, the final good. Bread is the final good and 700 rupees is the value of output. The cost of bread, the value of bread is rupees 700, which is the final good. Fine. He sells the bread. Is the final price of the bread is 700 rupees. So the value of bread, the value of output is 700 rupees. So this is the value of output. 700 rupees. These 700 rupees is the value of output, and these 500 rupees is the intermediate consumption. Is that clear? Now, the difference between value of output and intermediate consumption, the formula which is written here. The difference between value of output, which is 700, and intermediate consumption, which is 500. Is that clear? Which is 500. The difference is rupees 200. And this rupees 200 will be the value added. This is the concept of value added. This rupees 200, the difference between final good, the value of output, and intermediate consumption is the value added. 200 rupees has been added on the flour so that it can be sold in the market for rupees 700. Now, value produced by each enterprise. Like this baker, there are some other bakers also, there are some other producers also. If the value produced by each enterprise, by everyone, is the value, the total value which is produced by all the bakers or in a particular industry or in a particular enterprise, if we add all the enterprises and we add it, then it will be known as the gross value added at market price. Suppose at a primary sector, we are talking about the primary sector. If we add all the production, all the value added, if we calculate all the value added in a primary sector, then it will be known as GVMP or gross value added at market price. And in other sector like secondary sector, if we add those value added also, then it will be also known as GVAMP or gross value added. So, in other words, if we add any sector, if we find out the value added of any sector, it will be known as gross value added at market price. Is that clear? Now, the sum total of GVAMP. If we add primary sector's value added, secondary sector value added, tertiary sector's value added, then it will be the sum total of those sectors, the value added of those sectors will be known as sigma GVAMP, means sigma gross value added at market price. And the total value added by all the sectors, by all the enterprises in our country is known as GDPMP, gross domestic product at market price, the market value of all the goods and services produced within the domestic territory of a country in a accounting year. Is that clear? All the production, all the value added of a country is known as GDPMP. And what we are calculating? We are calculating the value added by every sector in our country. This was just one example. There are many other bakers. We have to add each and every sector's value added or GVAMP. Is that clear? Fine. Now let's come to the other formulas. What are intermediate consumption and what is value of output? We already understood what do you mean by value added. We have understood the concept of value added. Now let's understand what is intermediate consumption. Intermediate consumption means the purchase of raw material. It means the purchase of raw material. Those raw materials which are meant for resale. Basically, these are the intermediate goods, and the expenditure done on the intermediate goods, the purchase of raw material which is meant for the resale, this is known as intermediate consumption. Now in the numerical questions, if intermediate consumption is not given directly, there will be numericals in which the value of intermediate consumption will be given directly. The intermediate consumption is 300 crore. But in case if intermediate consumption is not given is not given, then we have to calculate the intermediate consumption with the help of domestic purchase and imports. Suppose intermediate consumption is not given, then we have to calculate the domestic purchases and the imports. Domestic purchase means all the raw material purchased within the domestic territory, and imports means all those raw material which is purchased from the outside the domestic territory. Is that clear? We have to add both the things and then we can have the intermediate consumption. Is that clear? Basically, intermediate consumption means purchase of raw material, whether from our country or from outside the country. Now, value of output. Value of output, it refers to the market value. It refers to the market value. That's why we are using the GVA-MP. Is that clear? Now, it refers to the market value of all goods and services produced during a period of 1 year. Total value produced. Total value, total market value of all goods and services produced during a period of year. So, how can you calculate? There are three things. First, all those things which have been sold, all the sales of a firm is included in the value of output. But there are few inventories. Which is left within the firm. They are not being sold. So those are the change in stock. All that unsold goods which is remained with the company, this is the change in stock. And also the self-consumption. Suppose some of the raw material or some of the not the raw material, some of the goods which is utilized by the producer itself, then it will be included in the value of output. The total value of output, whether utilized by the producer himself or utilized by the consumers, or which is being unsold and it is left with the company or with the firm. All these three things are included to calculate the value of output. Now let's see once again. Value of output: sales, change in stock plus self-consumption. If you add these things, we will get the value of output. Now, how to calculate change in stock? We can calculate the change in stock by the closing stock minus opening stock. The students of accountancy know this thing. Change in stock is equal to closing stock minus opening stock. That's how you're gonna get the change in stock. Now sales. How to calculate sales? Sales can be calculated by two things. Sales, if price and quantity is given, then you can multiply the price and quantity and you will get the sales. If domestic sales and exports are given in place of sales, then you have to add the domestic sales, the sales which is done within the country, and all those sales which is done outside the country, that is exports. So we will get the total sales. Fine. Domestic sales plus exports, we will get the total sales. Is that clear? So basically the value added means, the formula of value added is value of output minus intermediate consumption. If we deduct intermediate consumption from the value of output, we will get the value of value added, and we have to calculate the GDP MP. If we calculate all the sectors GVMP, then it will be denoted as sigma GVA MP. Sigma GVA MP, and it will be known as GDP MP. Now, with the help of GDP MP, can you calculate the national income, which is NNP FC? Now, let's move to the next numerical.